who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 25th day of October 2017. What a difference a day makes, eh? Hope you're having a happy Wednesday wherever you are, whatever that means to you. If you're in a certain time zone, it means half your work week is behind you and there's less in front of you than behind you. Hump day, you know. So, downward slide into the weekend, all that good stuff. Anyway, I'm glad you've joined us today. Michael and I both are glad you've joined us today. If you're returning, welcome back. First time, a special welcome to you. Glad to have you with us. We are now in our second decade of broadcast history, so please do pencil us in for the next decade, okay? I have a chart up of the S&P 500 E-mini Futures. If you can't see it, there's two ways to see it. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. Within 30 seconds, you'll be registered through the end of the month, which is only a couple days away, and that means you'll have to register again, 1st of November, But that one registration is good for the entire month. One-click access. Gives you the charts and the chat box, okay? Also, you can approach us from the other direction. That would be youtube.com/CFRN/live. LIVE. Bookmark that page and you'll have one-click access every day. Now, speaking of the chart I have up, when I left you yesterday, we had put this little box here, and we had drawn this here, and we put this little line here. And as this candle and this candle were both looking seriously at different points that, like the bottom was going to fall out, we said because of the low of this candle, we need the market to prove itself. Prove that you're going to do that. Okay? And if you can prove that, then we'll be happy to get short at 56 and trade it down to 54. Alright? That puts our stop up at 58. Okay. Unless, or 68, unless you recognize the importance of this and the potential of this. Okay? But that was just a little, just a little radio trade. So what happens? Price comes down, doesn't quite hit 64. The low was 64 and a quarter. Missed it by a tick. Okay? Now, why is that? Well, take a look over here. People that got long here enjoyed a ride up to here, and then as it pulled back, they got in a little bit earlier and took a ride up to here, and then it pulled back and they got in a little bit earlier and it pulled up to here, and so they figured, heck, I'll jump in early one more time. But it didn't get them exactly where they wanted to go, and that did it. Okay, it happens. So now what do we do? Okay, price rolls over, comes back down to test this area again. Look at the horizontal line on my cursor. See that? See that? See all these here? So we hit the zone, bounce. Okay, so now before where we had all this support, now take a look at these wicks up top, right across here. Price is hitting that 25.66 area, and 65.66, and it just can't stick. Up once, up twice, third time it gave up the ghost. And then we've been asking for volatility, we've been asking for movement. Well, how low can she go? Let's just see about that thing. And we open the show once again. Where? Inside of a weekly trading zone. 2548/2549. Okay. Now we do have one zone left below. It's way down at 36.37. And based on today's activity, I should probably go ahead and put that in there. Again, I don't usually give out the weekly zones to the community at large until Thursday. Those are reserved for partners. But because I couldn't find last week's sheet and I crashed my platform, well, we had to have something to work with. So, anyway. So now, here we are, bouncing off of this 48.49 area that was given to the partners on Monday morning, 6:15 a.m. Eastern. And so as price starts to fall, any CFRN partner who has access to the weekly trading zones, by the time this candle opens, and maybe even by the time this low right here is taken out, they're starting to go, you know what? I believe I could trade 25.55 down to 25.49, or at least 25.50. That's 5 points. That's not bad, especially since we've had weeks with, or days with, 8-point ranges in the S&P of late. Now, we've consolidated a bit here, but from the looks of things, it might not be over. But again, we want to make the market prove it. Prove that. We like to get at least 2 points away, you know, because of that magnetic attraction of the zone. Okay, so we'll watch this, we'll keep an eye on it, and we'll see what opportunities it presents. If a person were to be short around 45, now keep in mind the market's fallen quite a bit. It won't fall forever, and there will be a bounce, and some buyers will see a cheap price and they will come a-running. So keep that in mind. But from 45 down to 40, wow, that's another 5 points if we get there. All right. Now, the price of Bitcoin today took a hit after the cryptocurrency underwent another split, with the newly created Bitcoin Gold seeing its value plunge over 60%. Not Bitcoin, but the Bitcoin Gold. Bitcoin hit a low of $5,374.60 on Wednesday. See, we're calling that a low now, and when for a while there it was like, oh my gosh, are we ever going to be able to break 5? Now it's a fallback number. And then it recovered nearly $300. The initial fall followed the hard fork that occurred yesterday. So, what's a hard fork? Well, it's important to understand how the Bitcoin system works. Transactions by users are gathered into blocks, that's what they call it, blockchain technology, that are turned into a complex math solution. So-called miners using high-powered computers work these solutions out to determine if the transaction is possible. Once other miners also check the puzzle is correct, the transactions are approved and the miners are rewarded in Bitcoin. The need for high-end machinery has meant that mining is controlled by a small group of people with very powerful computers. Jack Lau, CEO of Lightning ASIC, which sells mining equipment, crypto mining equipment, came up with Bitcoin Gold as a way to change the dynamic. The idea is to allow Bitcoin Gold to be mined by more people with less powerful machines, therefore decentralizing the network further and opening it up to a wider user base. To this end, the collective behind Bitcoin Gold came up with a code that creates a fork or split in the Bitcoin blockchain. That occurred on October 24th and resulted in the creation of the Bitcoin Gold cryptocurrency. Wait a minute, haven't we heard this story before? Yep. In July, Bitcoin underwent a similar fork that led to the creation of Bitcoin Cash. There was an initial surge in price and it hit an all-time high of $914, but has fallen steadily, according to CoinMarketCap.com. Today, Bitcoin Cash was trading just above $330. Bitcoin Cash's market capitalization, the total value of the cryptocurrency in circulation, is just over $5.5 billion compared to more than $93 billion for Bitcoin. Everyone who owns Bitcoin will receive Bitcoin Gold. This is being issued at the rate of 1 Bitcoin Gold to Bitcoin. Since Bitcoin Gold was issued, its price has plunged over 66%, trading at just over $161 per coin. It appears the sell-off was due to investors dumping the cryptocurrency, perhaps signaling a lack of faith in the newly created coin. Bitcoin also fell sharply before recovering, and other cryptocurrencies like Ethereum took a hit as well. Bitcoin Gold has faced teething problems in the few hours it has been around. The website for the new cryptocurrency suffered a distributed denial of service attack, DDoS, which is when a server is overloaded with malicious requests. Any major cryptocurrency exchanges have not begun trading in Bitcoin Gold yet. So what are the experts saying about the fork, the hard fork? We'll talk about that a little later in the show. Right now, let me just give you the numbers for the worst day we've had in the markets for some time. Now, worst day for investors perhaps, but for traders, it's the best day. The Dow Jones Industrial is currently cash market down 156 points, a little over 0.5%. NASDAQ down 68 points, a little over 1%. S&P 500 down 22 points, almost 1%. The Russell 2000 down 16 points, that is a little over 1%. So every one of our 4 indices is a mover and a shaker today. Been a while. Crude oil, we had inventory numbers today. We're down 58 cents, a little over 1%, trading 51.89 last. And gold, not crypto gold, but real gold, is trading 1279.70, which puts it up $1.39 on the day. I know, it's green. Hey. In the Asian markets, Nikkei down 97 points at the closing bell, almost 0.5%. Shanghai up 10 points, and the Hang Seng up 147, which is a little over 0.5%. And in the European markets, color of the day, absolutely red. FTSE down 80 points, over 1%. DAX down 60 points, 0.5%. And the CAC down 20 points. So Europe is red, Asia is mixed, and here at home, red is the color of the day. With that, we'll head over to Michael, get a recap of everything that happened today in the live training room. Great day. Michael, if you're ready, bring it on. And that move I mentioned on the S&P, it looks like it's still falling, guys. Okay, I can see your charts, and I'll hit mute. If you're ready for me, too.
I am.
Okay.
I just had to
there we go.
the right peak.
I can see that, too.
Okay.
With the pretty red border around it.
Yeah. I wish I knew how to do that, so because it highlights it for for the viewers. They can see what market I'm actually clicking on.
That's interesting.
I wish I knew how to do that. I can't do it.
It probably has to.
It
It has something to do with the way the Windows color system is set up on that computer, and what it does is it tells it to highlight the active window.
Yeah, and I looked for a setting for it. I mean, this is a different version of Windows. I think a different version of Windows than I had on my other one. And the other one's fairly new, and this laptop I've had for 4 years. But it does have a nice red.
It's nice. All right. It's all yours.
Okay. Thank you. All right. Good afternoon, everyone. Today is Wednesday, the 25th day of October 2017. Today. Well, first of all, if you have not taken a free trial with us, go to the homepage here at cfrn.net. Then right here where it says sign up for the CFRN live training room, 100% free trial. User indicators on our strategy. Click here. Just click there. Once you click there, you'll be sent a confirmation. Actually, no. Once you click there, you'll go to this page. Yeah. And on here, we just ask for your email, your first name, and how you found us. You hit the submit button, and then you'll be sent a confirmation. Okay. Once you do that, once you get that confirmation link, then we know you took the trial. All right. We don't know until you get that confirmation link. So please do not forget to hit that button. All right, now go over the recap. We had, well, all right, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 25th day of October, as I stated. Between the pound and the euro, we ended up with +2. We lost 6 on the euro. We made 8 on the pound. On crude, we made 4 ticks. And in gold, we made 42 ticks. That put us at 472.50. When we were at the high of the day, we were just over $600 a contract. And then we had 2 stop-outs. But 472.50. And it took us 5 minutes and 1 trade to get to our goal for the day. And at that point, we were at $410 a contract. We took a total of 14 opportunities today. So we had some good volatility today. You know, that's what we need. We need the volatility. Things got to be moving for us to trade them. All right, so on the month now, 872.50. That's over 18 days. And on the year, 27,552. That's over 201 days, averaging 137 per day. And that's 1 contract, 2 hours per day. Okay. All right, let me minimize that. And I'll bring over the ES because the ES actually moved today. And I gotta give it credit. Credit is due. It actually had some movement. Now again, we started at 9 a.m. today. We started a half hour earlier than normal. Right in here, the ES was really choppy and a mess. And it came down, got stuffed in the zone. But once it broke out of the zone, it actually had a short right there. It had another short right over here. And then the slingshot was all messed up, so you couldn't do any more shorting. Okay, until over here. Actually, right in here was another short on the ES. And right now it's putting in a new low on the day. It's still going down. And if I recall correctly, on the daily double, yes, consider selling the ES at 25.45 for a target of 25.43, and we just went through that target, 43, with a final target of 25.38. So the last couple of days, these daily doubles have been killing it. Dwayne did one yesterday on crude that made $500. For those of you guys who are not doing the daily double, that one trade yesterday covered a whole bunch of daily double payments. And I'll show you how to get to that. The daily double is right here on our home page. Okay, if you wanted to take the daily double, you click on that. All right. All right. So go to gold now. Today in gold, I mean, we nailed it this morning. First trade. Some people got it with me. Some people didn't get in fast enough. Hang on, I'm scrolling back here. Still scrolling. Give it a second. There we go. This was our first trade of the day. It was momentum long trade here on gold. And we got in there and we got out 41 ticks later over here. Okay. I think it was here. It might have been over. It might have been actually right over here. And I left another 20 ticks on the table probably there. But that was our first opportunity in the gold. And then right over here, we got 6 more ticks, put us at 47. Then 3 more to put us at 50. We had a break even. And we stopped out on this one, sadly. Then we had another break even. Now, during the break, let's see. Didn't really have anything in here during the break. We changed directions and it started going up. And magnify this a little bit. Magnify. Yeah, so there was a long trade right here. Probably would have been a break even. And then another one right here. To move that up to new high right there. Okay, so we pretty much killed it today in the gold. The euro, we had +2 on this move right here. And we missed a couple of opportunities in here. And we stopped out there to put us at -6. And it got really choppy in here, really messy. So we didn't do anything else in the euro. Okay, we're at -2 on the euro. In the pound, okay. Our first opportunity here on the pound, we had a break even. And it's looking like I forgot to put right in here. Right here on the pound, we had +4. Okay, and right there we had another +4, put us at +8. Over here, we didn't do anything with this because it was going right into the high of the day. And it just flattened out after that. Okay. All right. And crude oil. All right. And we started out in here right after the open. Crude. And we ended up with a break even on that one. And over here, we had +4. Okay. And right here, we got another break even. And the break came, and see, that would have been going into the low of the day right there, so we couldn't have done anything with that. This right here would have been a momentum short trade. Stop would have gone break even already. And that was it for the crude. Oops. Let's pop the questions out. Okay, there are no questions. All right, and that was our day with the crude. And see right now, it's just started pushing back up. We did have crude inventories come out today, and we had a little bit of a build, which means it was positive, and they were expecting a draw of 2.5 million barrels or something like that. Okay, so that is all that. Now, if you have not taken a free trial with us, go to the homepage here at cfrn.net. Right up at the very top where it says click here, click there. And that will bring you to this page where you just need to put in your email, first name, and how you found us, hit the submit button, and then you'll be sent the confirmation link. You must click on the confirmation link. Okay, if you don't click on the confirmation link, you will not get your free trial. You must click that confirmation link. Okay, back to this spreadsheet. Today, whole different day than yesterday. Yesterday should be good. Sorry. Today we made, between the pound and the euro, we were +2. On crude, we were +4, and on gold, we were +42. So that's 472.50 today. Okay, and we took 5 minutes in one trade to get to the goal for the day. At that point, we're at $410 a contract, and we took a total of 14 trades. So 872.50 on the month, and on the year, 27,552. That's over 201 days, averaging 137 per day. Okay, now, if you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. And that's it, guys. With that, I can slide this back over here and pass control back out to fabulous Phoenix, Arizona. In Studio A, overlooking South Mountain, America's largest city park.
Okie doke.
Yes. What's that? Voice now? Just now.
Okay. And there we go. Okay, recap of the recap.
Today it took 5 minutes and one trade to get to $410 a contract.
5 minutes One trade. How much?
$410 a contract.
Now that's a way to start the day.
That is definitely the way to start.
That's a way to end the day.
Mm-hmm. Yeah.
Yeah, buddy.
It's good to have some volatility again.
Yeah, boy, it's awesome. Now,
Yes.
a little bit of a pullback here, a little bit of a move higher, but you have to keep in mind that, let's say this candle right here, for instance, at one point it was a green candle, all the way up to, see where the top, see the bottom? See that?
Mm-hmm. I do see that. I do see that. How often you see that kind of symmetry?
And so down we close here, we open here, we have a green candle. Okay, so it's going to bounce off this zone and move higher. Well, you got to be careful about assuming too much too quick, because as we can see, it didn't. When you have a trend down day going, rarely will the market put in a V bottom, okay, where it just, you're going to see probably some stuff like this, and slowly she turns, okay. What's going to happen here? Well, in 27 minutes, we'll know the answer to that, won't we? Yes, we will. Okay, now John had some issues with his equipment yesterday. Today is Wednesday, so Wayne Jett should be joining us. And I'm going to check here and see if John is joining us. And if so, we will leave the light on. Okay. Okay. Uh-huh. Do you see that voicemail that just came in?
I did. I talked to him last week, and I sent him to go to webinar. And he tried a different browser, and it worked. And he's just having a hard time getting into the meetings.
Okay. I wonder what the problem is. Oh well. Okay, guys. So we talked about the S&P. We also talked about Bitcoin. And back to the hard fork we were talking about earlier. There are differences of opinions among the experts within the Bitcoin industry as to whether a fork is good or bad. These forks are very bad for Bitcoin. Saturating the market with different versions of Bitcoin is confusing to users and discredits the claim that there are a limited number of Bitcoins, since you can always fork it and double the supply. See, that's why we did not create a Carl Sagan cryptocurrency with billions and billions and billions of coins. 1 million, that's it. That's it. Now, some have said forks are a good part of any cryptocurrency ecosystem. And what are they comparing that to? If a crypto community has irreconcilable differences, then you can go your separate ways, and that's just fine. That's from Bob Somerville, who's the chief blockchain developer at SweetBridge, a company that creates blockchain solutions. Still, no matter what, fork, spoon, knife, there is a bullishness that surrounds Bitcoin. A survey carried out by CNBC last week asking where the Bitcoin price was headed found that 49% of the 23,118 people who voted answered above $10,000 per coin, which is a mild estimate. Lots of estimates out there for 25,000 and 50,000 and 500,000, even a million, you know. We're not predicting, we're not prophesying. That's not part of what we do. We just trade what's in front of us. Whatever is in front of us that can be traded, we will trade it. And we'll trade it the same way every single time. Amazon has got the banks worried. Banks around the world have spent the past few years preparing for competition from small, nimble technology startups. FinTech, it's called, F-I-N. Financial technology, FinTech. Turns out the real threat may be Jeff Bezos, who was at one time a small, nimble technology startup. In fact, he was a laughingstock at one point. Who's laughing now? Financial institutions have parried the threat from fintech firms by incorporating some of their innovations through partnerships and in-house coding teams, according to McKinsey & Company. In its annual banking report, McKinsey said that the industry needs to continue its digital makeover to protect the up to 40% of revenues at risk by 2025 and prepare for competition from so-called platform companies like Bezos' Amazon.com, which you may have heard of. We thought that fintechs would provide the chief digital threat. Instead, it's become clear that e-commerce companies such as Amazon and Alibaba are reshaping one industry after another, blurring sector boundaries as they seek to be all things to all people. Bezos, founder and CEO of Amazon, built the company into the world's biggest online retailer. As he extends Amazon's reach, the Seattle-based company has had discussions with banking regulators about financial innovation. According to lobbying disclosures reviewed by American Banker, it already has a small business lending arm that has doled out more than $3 billion to more than 20,000 of the merchants on its e-commerce platform. American technology giants, including Alphabet Incorporated's Google and Facebook Incorporated, have already begun to encroach on finance activities like payments. Concern is spreading through the boardrooms of traditional lenders. Barclays' CEO said at a conference this month, banks need to defend their turf, and predicted payments will become where the battleground of finance is fought over the next 15 years. In Asia, firms like Alibaba have made the most headway. Digital upstarts in China have grabbed huge chunks of market share from banks, including 25% of unsecured consumer lending and 12% of mutual fund sales. You have companies that have hundreds of millions of customers, offer a great customer experience, and trade at a currency that rewards revenue but not necessarily profit growth. They are under pressure to keep increasing revenue, and financial services is a large pool they can go after. We're starting to see that. In McKinsey's vision for the future, tech companies will reorder global commerce into ecosystems in which giants provide a variety of products and services through a single gateway. Banks will still have opportunities in this new order because they are trusted by customers and hold vast data sets about retail and corporate transactions. The global banking industry, which has an 8.6% return on equity as of last year, could offset the loss of profits from price competition by partnering with these platform companies and generating more revenue from their data. Banks that go further by creating their own platforms could elevate their return up to 14%. Bankers in Asia and parts of Europe and Latin America are much more worried than the counterparts in the U.S. While American bank executives often cite heavy regulations as a barrier to entry against technology firms, the position of regulators could evolve to create a more level playing field, according to the report. Even without that, as technology giants build out their consumer ecosystems in the U.S., they could offer things like cross-border transactions and payroll services through established providers. There's no reason they can't offer deposits. They could have bank providers in their mall like they do with lots of other merchants. If anybody wanted to not have a bank charter, this is one way you could do it. The whole concept of blockchain technology and distributed ledger is you do away with the need for the third party. If I'm going to write you a check, well, you need a bank account to deposit that check in, and I need a bank account to write you the check from, and then the check has to clear my bank and then your bank, and so we got two middlemen between us, unless we happen to bank at the same bank. And that's just one example. But with blockchain technology, it's peer-to-peer. In other words, I can move currency from my account to your account, from my wallet to your wallet, without PayPal, without Western Union, without Bank of America. That's why they're worried. We talked about this yesterday. That's why I said that day that Jamie Dimon, it sounded like he was being personally affected by this. It's becoming more and more clear why everyone in the financial services industry, and this is going to touch brokers, this is going to touch traditional exchanges, the world is going to be a different place. Not because of Bitcoin, but because of blockchain technology, because of distributed ledger technology. It's not a matter of if or even when, because it already is. And that's the deal. Another news today, earth-shattering, Apple has acquired a wireless charging company, Power by Proxy. It acquired the New Zealand firm for an undisclosed sum, but is reportedly planning to keep the business running in the country, at least for now. Wireless charging. How do they do that? Twitter announced some changes with regard to ad transparency. Its plan is to make visible to anyone all political ads purchased on the platform, as well as the identity of the purchasers and how the ad is targeted at users. Well, you don't say. Now, I mentioned to you yesterday that, in fact, I showed you that the website cryptoworld.com is still on the market for $29,000, and that we had scooped up cryptoworldradio.com for a little less than $29,000. It was more like $8, but don't tell anybody. Twitter.com / Crypto who? Podcast. Site hasn't been built yet, so I thought I'd go ahead and build out the Twitter channel, which I think turned out pretty nice. I need to get a new headshot. But yeah, I'm pleased. Now the actual website, as it's spelled, cryptoworldradio.com, it will have cryptocurrency podcasts from around the world. The best of the best of the best. Just for you. Okay? Alright. So, I brought all that up because I was giving you news about Twitter and their political ads, and how they're really going to look hard at people that pay for political ads. 2 former Uber engineers have filed complaints against the company alleging unfair pay. Among other claims, the 2 women also said they were ranked by male colleagues based on their attractiveness. You don't say. Apple has said the iPhone X will be available for store walk-in purchases on launch day, November 3rd. It encouraged users who want to buy an iPhone X in store to arrive early. People will be camping out for days to spend $1,000 for minimum of $1,000. That's like the base model. No air conditioning, no tires. Oh, you want tires with that? No. It will be the smallest storage, but it is blazingly fast. Google has updated the Google Assistant with a focus on children. The new software version brings over 50 new games and trivia facts for kids to play with, and will be available on both Google Home devices as well as Android phones and tablets. And I don't know if you've heard, but Amazon is really reworking the Echo thing, and pretty soon you won't need any friends. You won't need anyone to counsel you. They're training it how to, if you're feeling down and depressed and maybe you're thinking of doing something bad, it will be qualified to talk you in off the ledge. That's a little bit freaky. We talked yesterday about Snap still having 150,000 smart glasses left on the shelf in a warehouse somewhere. Some guy at a dollar store will probably snap them up. And Amazon has given its App Store a visual overhaul with a new focus on Amazon Coins, the company's virtual currency. The revamped digital store is rolling out now to Fire TV. Hang on. Yeah, the old browser. Really? Alright, maybe we won't talk about that. I'm going to get to the bottom of this one way or another. Alright, let's try it again. Oh. Okay. Amazon's Kindle app isn't the only mobile app from the company getting a makeover today. Amazon has now quietly introduced a new version of its App Store app for Android devices. The new store features a visual redesign and an increased focus on Amazon's own virtual currency, Amazon Coins. Introduced in 2013, the Amazon Coins platform represents a different means of encouraging consumers to pay for apps and in-app purchases. Instead of seeing a dollar amount associated with their purchases, app developers show the purchase amount as coins. This could take the sting out of spending cash. That's what Amazon believes. To what extent it has paid off is a bit unclear. Since then, Amazon has tried other programs meant to encourage users to download more apps, including giving them away for free. But that program, called Amazon Underground, shut down earlier this year. At the time, Amazon said that it had other ways for developers to make more money, including Amazon coins, which is why it is no longer needed. Now Coins has a prominent position in the new App Store. From the central tab labeled Coins, App Store users can buy coins in various packages. The idea is that the more coins you purchase, the more you'll save on the purchase amount. For example, 100 Amazon coins are worth $1. But when you buy them in larger bundles, they cost less. With the highest package, customers can save up to 22% on their coin purchases. Not to be confused with cryptocurrency. However, developers still receive their 70% royalty even when the customer buys their app or in-app purchase using coins. That means Amazon is eating the discount. In addition, coins are used by app developers as a way to encourage others to try their apps or stay engaged. In these cases, Amazon gives them away for free as in-game rewards. The Coins tab will also showcase ways consumers can earn more coins, giving developers increased exposure. Beyond the new focus on coins, the revamped App Store also introduces a simpler, more streamlined interface with visual elements like bigger images promoting the apps and horizontal navigation at the top for browsing your very own personalized recommendations. So there you have it. They are so close to launching their own cryptocurrency. I just know it. Overstock has, and we'll talk about that tomorrow because I hope to talk to Patrick Byrne, the CEO, this afternoon. We'll see how that goes. In other really big news, they continue to beat Trump up. It's every day. I don't know. I'm at a loss. Let the guy do his job. I mean, he got elected. Just let him do the job. Remember Benson? He had his own show. He was in the TV show Soap, and then he had his own show, Benson. Robert Gilliam, he passed. He was also the voice of Rafiki in The Lion King. But yeah, he was 89. I did not know that. All right, let's get a look at these markets. I think Wayne will be joining us here momentarily, as far as I know. Still haven't heard from John. Hope he's okay. All right. Oh, I gotta log in, and then we'll have a look. Oh, see there? I said we had, 27 minutes to wait and see what's going to happen here? Well, now we know. And there's still 5 minutes left in the life of that candle. So it's pulled right back up to the zone. Remember, we moved through a zone. We pull back to confirm, in this case, good resistance. If it was coming from the other direction, good support. So it'll be very interesting to see how the market handles this area in 4 minutes. Last night on the Concierge Trade Alerts, on the S&P 500, we said to consider selling 25.58. 2 points away from the zone. Partners already had the zone. So 25.58. Okay, from there, and if you want to snap the email that went out last night, snap away. Went out at 8:10, 2010. Okay, got it? Okay. All right. So from 25.58 down to the zone at 49. That was a 9-point move right there, which transpired basically over an hour and a half. In a 9-point drop, and then we continued on down. The swing low, 25, 41.50. We'll just call it 25.42. So from 58 to 42. $16 points. Wow. That's been a while. Considering we've had days, entire days with an 8-point range. So that's a good thing. Volatility. When you're trading futures intraday, it's different from the buy and hold investment kind of philosophy. Of course, for your retirement 401k, you want the markets to increase over time, and they do. But intraday, doesn't matter which way the river flows as long as it's flowing. Okay? Now, this is a dribble. This is a waterfall. Okay? Alright, we're at the top of the hour, and we're right at the zone. When the new candle opens here in less than a minute, we'll see what direction it takes. And I had a message John was logging in, so I will wait and see what happens. Looks like Wayne logged in. He just doesn't have his mic on yet. But I don't see John yet. And see if he responded to my message. No. Okay. Well, as soon as Wayne turns his mic on, we'll go to him. And for now, we'll go to the Dow. Well, in theory, we'll go to the Dow. Come on. There it is. Okay. Mike, I have no idea about your question. Maybe Mike already answered that. Oh, Fats Domino passed, I guess is what you're saying. Along with Robert Gilliam. Okay. Alright, on the Dow last night, we said to consider selling 23,335. That's how the email read. 23,335. And so what did we do? We went from zone to zone, overshot it a little bit, bumped our head up against it a few times, and then we dropped to the zone below, where we are currently consolidating. See, when the markets flow, things work the way they're supposed to, or the way you hope they will. Gotta love that. Just gotta love it. So from 335 to 235, that'd be 100 points. We'll just call it 100 points plus. $335 to $235, yeah. We'll just call it 100 points plus. Not 1,000. 100. And there we are. 100 points plus. Okay. That's the story of the Dow. Not much else we can say about that. But again, I hope you can see the benefit of having these numbers Monday morning at 6:15. Because on Wednesday you can put them to work. You get that, right? Yeah. Okay, I got blinking lights going on over here. What's this all about? Oh, I see. It's a message from you, Leslie. Gee, I don't know. I don't know what to say, Leslie. So John was trying to log in, and for well, let me just type her a message. Well, thanks for trying. Thanks for trying. Okay. Gotta be polite. Always. Now let's see if Wayne's turned on his mic yet. Oh, Wayne was there and then he was gone. Maybe he couldn't get in either. Maybe there's some problem with the interface. Okay, maybe he'll pop back in. Alright, let's just go ahead and get through the rest of what we got to get through, and then we'll be through it. That's how that works. If you know what I mean. So consolidation here at the zone on the Dow. We've already covered all of that. Let's move on to something we haven't talked about. Just go to gold, which was up a wee bit when we checked the numbers earlier. Okay. We really would like to see the gold. Come on. Looks like we might not be seeing the gold today. Oh, Wayne had trouble connecting. Okay, so him and John both. Okay. Let me just tell him that John had the same problem. And Leslie, if you're listening in, it's definitely not your fault. It's something to do with the GoToWebinar software. So my apologies to all parties. Okay, if it's not going to take us to go. Oh, we are at go. Huh. You look away and then there it is. So price came down, hit the zone. Now is that this week's zone? 75, 76. Yep. Okay. And the zone overhead is, okay, that's a this week's zone. This is a last week's zone. This week's zone is 84.85. I must have two charts of this. 84.85. Okay, so where'd we go? We went from zone up to the zone, back down to the zone. Last night in the Concierge Trade Alert, we said to consider selling 1274, which amazingly enough did not get touched. Yeah, that's a previous day, but the alert went out at 8:10 last night, 2010 Eastern. And we fell zone to zone. Boy, I saw something, whatever it was, that made me stay away from that, because I definitely sent the email out to sell, consider selling 74 if you got the chance. Went from zone to zone. Now this zone to zone move from 75 to 84, that's $900 per contract. I'm sorry, 76 to 84. No. 800 up, 800 back down. Nice move. And we missed it. Okay, soybeans. What do we got? Soybeans, consider buying 978. That would be right there. And we put in a swing high up at 983. So that's 5 points at $50 per point. Important prices, important areas are almost always tested. So we've gotten back below the trigger. It's possible we could take another run. Okay. Crude oil. Okay. Now, are these this week's zones? Yes. Yes, they are. From zone, almost to the zone, almost back to the zone. Zones are an area. Back up to the zone, and now we're trying to go back down to the zone. Having some difficulty getting there. Today was inventory day. Last night in the alert we said to consider selling 52.05, and we're sitting right at 52.06 right now. So that is triggered and put in a low at 51.89. So that would be, I'm sorry, 51, yeah, 89. So that would be $160 per contract. That's all it's produced so far. Already covered the Dow. Beautiful move there. The Russell. I think the Russell's the one market that, or maybe I moved them yesterday. Let me check. No, I did not. If I'm going to do one, might as well do them all. Okay. So the lowest zone this week on the Russell is 1480. I didn't quite make it. Missed it by a few ticks. And the zone over that is 93.94. Oh, the wheel. Okay. 93.94. 0102. Stop. And then 0809. And we'll go one more above that, which is the next zone overhead, 1617, which kind of looking like we may not go there this week. 17 and 16. Now, for anyone that didn't have a chance to do a screen grab on the alerts earlier, I'll put them up again for just a second so you can grab them. Got it? Okay. Now, last night, on the Russell, consider selling 1498. It's going to be right there. Important prices, important areas. Sure got tested hard there. 1498. Russell pays $50 per point. And we just dropped right through that zone like it wasn't even there. And then couldn't quite get to this one. But we did put in a swing low at 81.9, so we'll call it 82. 82.98. 16. So that's 16 points at $50 per point. Now, that's what the market made available. We never get out of the swing high or swing low because we trail our stop. And if you trail your stop, you're going to almost always leave something on the table. And you have to be okay with that. Okay? Okay. All right. 16 points. NQ. We don't do zones on the NQ, so I won't be doing any of that, but we did say to consider selling 60-70. 60. We're going to have to. Okay. Sell 60, 70. But you see that right there? That probably resulted in getting stopped out. I'm going to put a line. We sent the alert out. Now these are 30-minute candles. So we sent the alerts out at 8:10, 2010. So we always use the next half hour, which would be 2030, just to demonstrate. 2030 right there, that red candle. 2030. So the first trigger came here, and it took us down to 60, 60, 75. That's one tick shy. No, I'm sorry. Call it 60, 61. So you got 9 points at $20 per point. Then you get this back and forth and this back and forth. And if you put your stop where you're supposed to, the way we teach you, you got stopped out. Keep in mind, these are 30-minute charts on the Concierge Trade Alerts. You don't have to use a 30-minute chart. You can use an hourly. You can use 10 minutes. You can use whatever you're comfortable with. But whatever chart you're on, this is where your stop should have been. And you got stopped out. That's part of trading. It's going to happen. The only way you didn't get stopped out is if your stop was way up here, and that's too much risk. Now, when we triggered yet again after the probable stop out, the market did drop all the way down to 60.10. So 60, that's 59 points at $20 per point. Okay. So that's about $1,200 per contract. What's left? Bonds. Boy, they just keep falling. Last night's alert said to consider selling 150, 106. All right, 150, 106. The swing low was 150.14. There's 32 ticks to a point. Pays $31.75 per tick. Hey, John, I see you made it in.
Yeah, what a drama.
What happened? Wayne had the same problem.
Yeah, I don't know what it is, but it came back. I had to reboot, and wasn't expecting to see the thing get back, but it came back. So we're back.
Yeah. Wayne wasn't. He logged in, but he couldn't go live. So.
Yeah.
Well, good to hear from you. How are you today?
Well, it's been a great day for us so far because we've been anticipating this sell-off, and we had it pretty well positioned yesterday. That late sell-off kind of really set the stage for what's happening today. And I sort of put out an alert saying that this, I called it not the Dow wasn't the last man standing yesterday; it was the last man sprinting, and I think that was a big trap, and because it wasn't confirmed by a lot of other stuff. And look at the result today. And I warned that if we, the fact that we sold off late in the Dow and couldn't hold the 200 points upside was a bad sign. Secondly, the VIXs were also acting very, very firm all day, and so all things being equal, it certainly was. This is the first time, for the last couple of days we've seen the VIXs take off, and we got long the VXX right down at the bottom, both of them right down at the lows. We caught the lows beautifully, and it wasn't easy, mind you. And they started going up, and we made an outside day actually 2 days ago. And usually, when you get an outside day, you get a kind of a somewhat of a test of that. That didn't happen the way we came up. I'm losing track. I've got to go and check the chart. Hang on a second. Yeah, 3 days now. So the second, we did come back a little bit yesterday, as it turns out, and test almost the middle of the range of the outside day. And then today we gapped higher, not by much, and we took off immediately. And the hard part of it was the NASDAQ is such a sneaky thing, this NASDAQ. You had this pop in the morning, which was a classic head fake, and then it reversed, and we got that. I had a buy stop in at I think it was around 675 or something like that, and it rallied up to about 685, and we put a sell in there. A little bit of a risky sell because it was pretty strong. Next thing you know, bang! It's down 10 points. And then after that, it started really caving in, and we had a very, very one of the fastest sell-offs we've had in a while. And I explained to people that the premium in the VIXs had not come in at that stage, and that was very early on in the day when we were only up 20 or 30 points or something. And I said, be careful, you got to be long the VIXs. And we got right up to 38.80 on the VXX. And we sold it and reverse short from there. And we just covered it down here around 37.5, 37.80, 85. And the same with the UVs. We got just off the 20 mark on the out of the markets in the short, and now we've got a pretty strong buy signal developing on these VIXs again. And this is a typical sort of rally here. You get this rally around this time, and it can go all the way to 3 o'clock. It might go to 2. I don't know whether it's going to last an hour or a bit more, but it tends to sort of stabilize. But if we roll over from here, and the VIX are probably going to give you the clue. If that happens, and you see the VIX is starting to get premium into them again, then I think you got to be long the VIXs and short the markets overnight, because this action today. I mean, look, we are down 150 points on the transports right now. That's the equivalent of about 350 down points. We're down a lot on a lot of things. I mean, and even the strongest stocks like the Nvidia, which have been tremendously strong, are down quite a bit today, down about $6. And Google and some of the FANGs, Facebook's acting bad today and was yesterday, but late yesterday, but the rest of the gang are actually holding up quite well today. So there's, I wouldn't, even though we're getting a sharp sell-off today, and this is a really scary sell-off, because for the first time we aren't seeing, we only just saw the bid come in about an hour ago. And we had several attempts on the way down, which it kind of went through like a falling stone. This is a sort of a day where we could end up. I mean, we've already given back all of the Dow gains of yesterday. That's a really, really, really bad sign. Not now. In 2007, we did that in a day. We were up 100, and then we ended up down 100, and that was the first time. We've really never had that in the 9 years since, or 7-8 years since. This is a little bit more sneaky. It sort of did it over 2 days. So we had a 200-point rally yesterday, and we've got almost a 200-point decline today. If you take the decline off yesterday's high, we're probably just about there. This is a pretty dangerous development. Ordinarily, it doesn't. This market's so strong, you have to be careful. Signing the death warrant, and having gone all the way to 23,500 rather, you have to be mindful that this thing could still come from behind and surprise everybody. But right now the market is definitely poised for the best case scenario is in the Nasdaq we sort of tested the 6,000 this morning again. We could go below that on the futures. Actually starting to get a sell again here right now, and we could go down to the 59.50 area possibly, and then if we turn from there, we could just resume the uptrend, and we could still have a pretty strong finish to the month, because in all likelihood some of the data that's going to come out towards the end of the month could be pretty good, including the employment numbers, based on the most recent claims. The other thing that spooked the market, I think we mentioned it a couple of days ago on the show, is when the bonds start tanking, they tend to overdo it, and then it spooks the market, and that's kind of what we're seeing today. And then you had this thing yesterday with Flake throwing in the towel, which is basically a win for Trump. But on the other hand, it was seen as, with these three musketeers, senators now, the three amigos, McLean, Flake, and Corker, they could put a spanner in the works, a wrench in the works on the tax. So this is a combination of all these factors sort of piling in today, and I don't think it's shaken the confidence too much on the tax front. But this may, as we were saying maybe earlier a couple of days ago, I said the week of the 20s in the month would be a problem, and they seem to be right now. We've got the 20s for the rest of this week, so we could still have quite a dust up in the market. However, we could have a late rally into the end of the month. I wouldn't rule that out. And we could even have a pop in early November, possibly on some good earnings on Google and stuff. And excuse me. And then we could. I think by around the 10th of November, or early days of November, I think we're going to have some more problems with this market. If we do get up to 24,000 sometime in that first week or so, I think the market's going to run out of energy of buying it. I mean, you can't rule out 25, I guess, but unless and then there's there's other factors around the corner, such as what happens if North Korea does this nuclear test or something. And it's sooner or later, it's inevitable something's going to happen there.
Yeah.
So
right.
So the gold has popped a little bit this morning. It's at 3 goes now. Excuse me, trying to rally. I think if it breaks 1281 on the upside, it's probably a go, and the silver getting back over 17 is equally going to be good. The golds, we inadvertently captured the lows on the Nugget and J-Note this morning, because I put the sells in on the dust at 26.55 or so, and 62 something on the J dust, and they're coming off those levels right now pretty fast. So that's a good sign. The gold stocks really aren't going anywhere yet, kind of weighed down by Newmont. But that could change, and I kind of believe that we could be in for a much bigger than expected rally very soon in the metals, assuming that we don't make new lows anymore. I think the lows have got to be in here, otherwise we might really have some problems. So in other words, if we hold these gains today and work our way higher, I think that's positive. DRYS is just making new recovery highs here at about 440, and actually we had a buy stop to catch this last move. So we did sell it previous time it hit, and it came down yesterday, and it's heading back up on a pretty weak day. That's a pretty good deal. We're in another stock that I picked up called ONCS. It's a I'm not recommending this particularly, but it's a cancer melanoma deal, and they just got some pretty big financing, and it got knocked down on it. It ran up to $1.55 about a week ago, came down to 105, and we put a buyout at 110, and it's about 115 right now. Looking quite interesting. That stock could be a potential solution to melanoma, which is a real problem for a lot of people, myself included.
Oh, really? I didn't know that.
Well, just a little bit here and there, So I think I've managed to get rid of them. But you spend too much time in the sun on cruise ships, it comes back to haunt you in later life, or in the Navy like you.
Yeah, right.
So that's there's a cricket commentator, had a very unique voice down in Australia. I can't remember his name now, but he regretted not wearing a hat playing cricket because he was about 80. He managed to live to about 85 or so, but he finally succumbed to melanoma from the head. He got it on the head. So that's why they make people, or suggest people should wear hats in the sun. Well, I mean, if you're bald, you gotta wear a hat. I think if you got hair, you're probably okay.
Yeah. Right.
So, yeah. So the energy also is down today. It's amazing. The gasoline. We've never had a period in the fall like this before, where we've had 5 million gallon or whatever it is, 5 million drawdown in the heating oil and the gasoline. That's a huge thing. By the way, the cold winter is coming. They had snow alerts and freeze alerts over in the UK yesterday, which is unusual. And as we've been saying for a long time, I think this winter is going to be the mini ice age, the start of the mini ice age. And I think, by the spring, or even before the spring, or all through the winter, they're going to be begging for global warming. And it might change the whole argument, 180, because I was talking to some millennials recently, and of course they all think that this global warming's for real. And when I explained to them that the volcanoes around the world spewing out more stuff than we've ever put out in history, it sort of kills the argument dead in a nanosecond. And people should understand that the world has a way of fixing itself and cleaning the oceans and cleaning the air. And I'm telling you, the air is unbelievably cleaner today than it's been in decades. That's a fact. I mean, I think I told you the story about when I was in London when I was a kid, about 4 or 5 years old. You go out shopping and you come back with soot all over your face, and around your nostrils from the air back then, from the power stations, which were at the time were dirty coal power stations, not clean coal, like today. So I mean, these clean coal, it's not a myth; it's the reality. They are doing a tremendous job cleaning up a lot of these things, and they're switching over a lot to natural gas, where there's virtually no pollution at all. And the cars, I mean, you know, they used to really nauseate me every time you saw a stinker, you know, in traffic, be shutting down your air and all that sort of thing, and that happens pretty rarely now. You very rarely come across a car that's spewing out smoke.
So what was that? Wasn't that one of Obama's first things? What was it, Cash for Clunkers? Is that what it was called?
Yeah, I mean that was a good idea. You know, that certainly.
Does China still have their really bad pollution issue?
I think it's a lot better, and they don't have the. Maybe now they do, since palladium's gone through the roof, but I don't think they had the strict, you know, what do they call that, exhaust system, catalytic converter. I don't think they had that so much years ago, but I think they have it these days. Look, most of the cars today are automatically built with those in them. I think that, and that's pretty much worldwide now. You know, India's still a problem with these motorbikes, the diesel bikes and things. They tend to be bad, but you know, even the buses are getting better. Some of the old buses are still pretty awful. You know, the diesel effluent from that is just dreadful. But you know, we're getting a better rally in the market now. We didn't catch this low a while back, so I'm feeling good about that, because look, you know, this is such a powerful market. You just can't get too bearish, you know, too quickly on anything, because days like, I mean, you can't rule out this market coming all the way back today. It could happen. So we just have to sort of play it by ear.
Gotcha. Well, the S&P is trying to make a little bit of a comeback here.
Yeah.
We've gotten back above this weekly zone at 2548/49. However, you know, that's, at this point, it's really nothing more than a pullback on a trend down day, and we would expect that. So let's see where. Well, if we get up to 2552, and guys, you see what this is, where I drew this line for a different reason earlier. That would be the 38% retracement from this high when we hit the zone up at 69.70, right there, down to the low that we put in earlier today. There's a 38% retracement. That would be somewhat of an ideal place. If it's going to roll over and drop, that could be it. Got the 50 right above at 25.55, and then you got another weekly trading zone and the 62% retracement up at 25.60-61. And you know, keep in mind, this has been an incredibly bullish market, and so one down day in the market, it's 2 days from now we could be saying, what sell off? So nobody's calling this the beginning of the end, but I'm not saying it's not the beginning. So we're just going to trade what's in front of us, like we do every day.
Yeah, exactly right. Yeah. So, well, listen, thanks for the invite.
You bet. I'm sorry you had so much trouble getting on.
No worries. No, I think we're back on deck now. So
okay,
thanks again. All the best.
Very good. Thank you so much, and we'll talk to you tomorrow.
All right, much obliged. Thank you.
Okay.
Bye.
And Wayne never did get a chance to get on because he was having the same problems as John. And go to software, it just was not cooperating. That happens. That happens. Okay, we've covered every one of the markets. Done all that we're supposed to do. We ran about we ran long yesterday, and I think we've turned in a full show today. So with that said, I want to thank each and every one of you for tuning in today. Again, pencil us in for the next decade. We're well into the second decade. Who knows how many more we got to go, but hope you'll be a part of it. Thank you for inviting us into your home, into your life, into your office, each and every day. Wherever you are, you can take us with you. If you got a smartphone, you can stream right from our home page. You can stream with the GoToWebinar app. You can stream from YouTube. We've done everything possible to make ourselves as accessible as possible to you, the smartest audience in talk radio. It's been my pleasure. If you've not taken the trial, go to our homepage, cfrn.net. There's a place there. Or you can go to apply.cfrn.net. The free trial with us really is free. No credit card required, no gotcha, no surprises. You get to use the platform, you get to use our indicators, we teach you our strategy. You really get to test drive it for an entire week. And at the end of the week, you're able to make a well-informed decision as to whether or not it's right for you. If it is, if you can feel it, if it's like, oh man, this is what I've been looking for, awesome. You can sign up for the 90-day mentoring program at that point. If it's not for you, then we shake hands, you give us back our indicators, and we hope you'll be a part of the radio audience each and every day. Tomorrow night, Thursday night, is Partners Workshop. We do that once a week, every Thursday night. All the partners come together, put it all on the table. If you've been on the trial and you want to be in that meeting tomorrow night, Michael, I'm sure, has sent you an email that has the link that allows you to become a partner. If you didn't see the email, can't find the email, or the dog ate the email, then let us know. support@cfrn.net, or call us 949-42-EMINI. 949-42-EMINI. 949-423-6464. Thanks again for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.